Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be talking about the mortgage insurance tax deductions and how to write off the mortgage insurance and if you qualify for this deduction. So the mortgage insurance tax deduction is for private mortgages and has been extended recently for another year to help generate more home buyers. They've extended this deduction hoping that more people are going to go out there and purchase homes. So it's definitely a good size deduction. Make sure that you guys are getting this, and I'm going to show you throughout the video if you qualify and how to report it. The deduction, let's back up here. The deduction allows you to deduct all of your mortgage insurance premiums. The amount of your monthly insurance premiums will depend on the amount you have borrowed to purchase your home. So it's based on the cost of your home, the amount of your mortgage insurance, and that full amount can be deductible. There's no maximum amount. You can deduct all of it that you paid. At our site, HarborFinancialOnline.com, you can use our online calculator to put in this deduction and all other deductions to see how it's going to affect your refund. So at the end of this video, I highly recommend checking that out. There are some guidelines to qualify when getting this deduction that include the following. Your income must be less than $100,000 annually for individual filers. Again, this is just individual filers, not if you're filing married. That will be increased. Your home must be purchased between January 2007 and December 31st, 2010. So it has to be in that time frame to get this deduction. If you earn more than $100,000, then you can still take a partial deduction. You aren't completely excluded. It's just they lower the amount. It's an automatic calculation, and it's different for every income level above that $100,000. Eventually you would be completely phased out, but if you're close to that $100,000, you're still going to get some type of deduction. This deduction will help many low-income families to afford homes and to afford insurance. So it's primarily for the lower income families, and so they can get this insurance. The average mortgage insurance deduction can save families $200 to $400 every year for that on their return each year they file. So it is a good size deduction, and it can go higher than this, it can go lower, but that's the average. If you are a new homeowner and you have prepaid insurance premiums, you may also be able to deduct this amount if you have the prepaid insurance premiums. This deduction only applies to your primary home. So if you have a vacation home, a rental home, any other home, you can't take this deduction. You can't total up 3 homes and put that on your return. It only is your primary home that you live in full time. I don't want you guys to forget all the other deductions for homeowners out there, especially if you're a new homeowner. You may not be aware of all these, so I want to cover some of these. Loan origination fees, those are completely deductible. So if you just bought a house, you should bring out those forms and see what the origination fees are. You can write those all off. Property taxes and mortgage interest paid are completely deductible. Again, this is the full amount. You don't get a partial deduction. You'll get a full deduction on these items. Itemizing your deductions can also make a big difference on your write-offs and lead to a much bigger tax refund. So now that you may be a new homeowner, you're going to itemize versus the standard deduction, where this is going to give you a lot bigger refund. So make sure you're doing that. In the video, I want to take you to Schedule A here and show you exactly where the mortgage insurance goes, and the other items, if you just bought a house, where to put it on that Schedule A. So let me bring that video up, or that slide up. Okay, this is Schedule A. This will be attached to your part of your 1040. So now that you're itemizing because you own a home, this is the form that's going to get attached to your tax return. In box 10, this is your interest and your points reported. You'll get a 1098 sent to you from that lending institution giving you these amounts, and you're going to enter it in here. So we'll just put some examples on there. If you have mortgage interest that wasn't reported on the 1098, this is the form that's sent to you. You'll enter it in here. So this is going to be rare, so I'm going to leave this 0. Points not reported to you. Again, up here, interest and points will go in this. It's going to be very rare that you get these without a 1098. Here's the qualified mortgage insurance premiums. So we'll put in 600. Now this over here, when you prepare it online, it's automatically going to calculate these totals. So you don't have to worry about adding it. So 9,600, and that's exactly how it works. It's going to give you the full deduction. It's not a percentage. So you can see here it's not lowered by any percentage amount. And this is your Schedule A, part of itemizing your deductions. Now, at our site, harborfinancialonline.com, I recommend you checking out the site. We have a free online refund calculator. You can put in those insurance amounts in there and see how it's going to affect your refund. You should see a pretty big difference, and especially with all the other homeowner deductions that you can get now. So, hopefully that helps you guys out. I appreciate you watching this video. We have lots more videos on credits and deductions out there. Just do a search on YouTube for us, harborfinancialonline.com, and you can prepare your return online. Thank you.